I'm going to do something that I've never done before in any of these videos. I'm going to discuss a more specific investment strategy. I'm a financial advisor and I'm speaking in these videos directly to other financial advisors who want to provide value to affluent, ideal clients. And all of this in a world where AI and other technologies are literally changing everything in our industry, quickly replacing our industry. So, today I'm going to discuss the importance of being future focused as an advisor and being thoroughly up to date on solutions to help ideal clients solve some of the most significant financial issues that are facing them and concern them. Now, in addition to being a financial advisor for decades, I also do research on our industry. And I can tell you that most financial advisors are not up to date when it comes to Bitcoin. Now, I too was behind the times until 2024. I was aware of Bitcoin, of course. I'd even studied Bitcoin a bit, going back to, believe it or not, 2013. So I had enough of the rough outlines of the concept of Bitcoin, but I didn't own any Bitcoin and I couldn't really explain it to anyone else. And I certainly wouldn't discuss it with a client. But frankly, I had written it off as nerd money for computer geeks or something like that. I was intrigued with the concept, but that was until 2024. At that time, I was at a conference when a close friend of mine, a CPA, an owner of a quite large multi state tax firm, he sat me down and he challenged me that he felt like I was just simply ignorant about an asset class, which he felt was very important. He explained to me that this asset class was the number one performing asset over the past 15 years. I was not aware of that. Shamefully, because here I am, a professional in the financial services industry, and I did not know that. And it had been the number one asset class, if you look year by year, in 11 out of the past 15 years. He explained that he thought it was a violation of my fiduciary duty to ignore something that significant. So I did. I spent a lot of time. And at this point, I've got more than 1,000 hours, well over 1,000 hours invested in studying Bitcoin and blockchain technologies. But in looking back, after 100 hours of study, it literally took that long. After 100 hours of study, I had a breakthrough of clarity, and I understood that really no financial advisor could truly understand the unique planning opportunities that Bitcoin offers for affluent individuals and families unless they've invested time studying. Bottom line, Bitcoin is simple to understand and it's simple to use. But for financial advisors, it's infinitely complex when it comes to its planning potential for high end financial advisors serving affluent families. You'll find videos that, and I've created quite a few of them, where I recommend how you, as a financial advisor, should structure, in my opinion, your 100 hours of study. I also warn I would not have conversations with clients. Frankly, I wouldn't claim to have really any understanding of Bitcoin until and unless you've spent a minimum of 100 hours studying the topic. It's that nuanced, it's that complicated. And I've created a community of financial advisors who want to accelerate their conviction around when and if Bitcoin is suitable for an affluent, ideal client's plan. I don't weigh in as to whether an advisor should embrace Bitcoin. I don't have a horse in that race. I'm on a divine mission to answer the question, what should I invest in Bitcoin? And my answer to that is, for high end financial advisors, the answer is you need to invest time. Only by investing time are you going to understand how Bitcoin could help you survive and thrive as an advisor during this coming tsunami of change that we're facing in the financial services industry. And you may not take it seriously. I'm looking at AI, I'm looking at digital assets, and I've been in this business 40 years, and I see a complete and total change and transformation of our industry, which most financial advisors are not going to survive. What most financial advisors don't understand is that because of the existence of Bitcoin, other financial products are quickly emerging, and that gets to the point of this video. Other financial instruments are now emerging that do not require your client to own any Bitcoin. Bitcoin is simply enabling and allowing the issuance of financial products that solve some big problems out there that nearly every financial advisor faces. For example, how many clients have you had that have ever sat down and asked you, where do you think I can put my money short term and earn a decent yield? But then they quickly add, but I don't want any penalties for withdrawal. I'm just looking for a higher yield than I can get at my bank. Okay. How many clients would be interested in earning, let's say, 10% on their money with daily liquidity, where they could get the money out whenever they need to? Okay, pause right there. I am not making any specific recommendations. I am going to be talking about some specific investment types, and I'm going to mention a specific company. But recommendation? No. That's your job. You're the financial advisor. My question is, are you even aware that this exists and that you can trade this product on most custodial platforms like Schwab or Fidelity? I'm talking about an awareness campaign. I want financial advisors to pay attention to the Bitcoin industry and just get better acquainted with the new financial products that are emerging around it. I want you to put your compliance department concerns aside just for a minute. And I want you to think about this, because there's actually more to this product than just 10% daily liquidity. All right. I'm trying to open your eyes to something that requires your time to evaluate the risks on behalf of your clients. Your first obligation is to your clients, even before your obligation to your compliance people. Now, your duty is to understand the asset classes. That's it. And this asset class isn't going away. It's been around for more than 16 years. It's growing exponentially every year. Because Bitcoin exists, I'm going to explain what I think is a powerful strategy, and even involves a tax strategy, that most investors and even most financial advisors haven't fully grasped and frankly aren't even aware of. It centers on a single Bitcoin treasury company called Strategy. The ticker symbol is MSTR. Now, I'm not recommending it. I'm wanting you to look it up. Now, originally this company was called MicroStrategy. MSTR was the first publicly traded company to hold Bitcoin on its balance sheet rather than cash equivalents. Now there are hundreds of these companies worldwide due to the success of MicroStrategy or Strategy. They came up with this strategy during the pandemic. They were faced with a critical problem because the businesses were all shut down. They couldn't go out and operate as they normally do. And the founder of the company talks about it as he was faced with a choice. Either he could come up with a strategy for a quick death, like a sale or a merger of the company, or he could come up with some slow death, borrow money or whatever, or he could do something different, go out on a limb, take a risk. He took a risk. He changed his company from a traditional operating company to a Bitcoin treasury company. They were the first Class A common stock purchased by investors who are looking for an operating company that holds Bitcoin rather than US dollars. Now, there are investors out there like that. And you might ask, why don't they just go out and buy Bitcoin? They can and they should, but some investors cannot invest the money that they have in Bitcoin. Either it's tied up in maybe a 401k and they just have to choose what's available in terms of investment allocation, or by charter. Sometimes a pension fund cannot invest in just anything, certainly not commodities like Bitcoin, but they could invest in a company like MicroStrategy. So anyway, this operating company holds Bitcoin instead of US dollars in its corporate treasury, and that's what it's known for. But the point of this video is that Strategy also has issued other securities around their company. Now, they're an operating company. They have a business. They've been in business 30 years or something like that. And the fact that they're a Bitcoin treasury company is just one feature of this company. They're a real company, a legitimate company that's had a great reputation for decades. So now they have, in addition to having their Class A common stock available, they have issued fixed income securities, and they are issuing these securities for investors who are looking for a lower risk profile. So what I want you to focus on is their new preferred stock issues. These preferred stocks from MicroStrategy, MSTR, they pay 9 to 10.5% dividend yield. Now, that yield was enough to catch my attention in a world where I'm used to seeing at or under 5%, but there's even more than the yield. In studying their preferred stock issues, I'm understanding as I look at this thing that a portion of the dividend that's paid to investors could be classified and would be classified likely as a return of capital. And I'm talking about a portion of the dividend that's paid. And that portion of dividend that's classified as return of capital could continue for years and years to come, possibly infinitely. So wait, hold on. I'm sitting there looking at this. I'm thinking tax advantages for an affluent client on a fixed income yield. This was new to me. So yes, I want you to dig in. I want you to study this. I want you to consider this a part of your 100 hours of Bitcoin study. You're not going to regret this. I want you to imagine a preferred stock that pays 10%. Just imagine the assets that are backing up the company's promise to pay those dividends are already on the company's balance sheet. It's well over collateralized, and the dividend offers tax advantage status. This begins to look like a security that could offer, you tell me, double the returns on the S&P 500, but through a fixed income security. This is new. This is different. I want you to put yourself in the shoes of a family that's now living off its portfolio. Now, I've had a lot of these type clients over the last few decades. You have a client that wants to start living off their investments. In past years, this family would begin shifting their allocation away from equities into what they feel is a more secure fixed income allocation. This was traditional for decades. So imagine a portfolio offering a higher rate of return than the S&P 500, but through a fixed income portfolio. I'm also thinking this is a new asset, but also from an estate planning perspective, you tell me if I'm wrong on this. I'm thinking they will probably receive a stepped up basis on this. So these securities are new. Most of these types of securities, the Strategy preferred issuance, they're less than a year old. When you look at it, see if you feel like I'm feeling. These assets are misunderstood by the financial services industry, and they look to me as though they are totally mispriced, at least right now in the marketplace. Again, maybe another opportunity for your clients. This is where a financial advisor who's not just waiting for their compliance department to tell them what they can look at and research. No, this is for a proactive advisor, high-end advisor, someone who's client-focused. You're trying to be future-focused, trying to just understand what's out there and be a better advisor. And these asset classes are available immediately, right now, to financial advisors for their clients. except that most financial advisors are not even aware of what I'm talking about. They have not studied the asset class. Most just look for a nod from their compliance people before they look at anything like this. I think this is the first video I've ever made where I've even so much as mentioned a specific company or any kind of an investment issuance like this. And I'm only doing it because I wanted to attract client-focused high-end financial advisors who relish the idea of focusing on the future rather than waiting around for the industry or waiting around for their compliance consultants to catch up. Things are moving too quick. AI will put advisors out of business before compliance departments fully understand all this. Now, let me stop and say regulatory compliance is critical. I've always kept my nose clean and felt that it was so critical. But that shouldn't prevent your own study. That should not prevent you from understanding the different options for clients. Even if you ultimately choose to hate Bitcoin, that's up to you. I'm just on a divine mission to convince you need to spend 100 hours looking at the topic. In terms of big firms, big wirehouses and stuff like that, I love big firms and I love compliance people. I've always been on great terms. I worked at a Wall Street-based firm, and I've always had a compliance consultant my whole career alongside me, helping me make sure that I am in compliance. But when those large firms and when those compliance people, over the past few decades, there are points when they've been clumsy or unmotivated in the past to really keep up with things. Advisors know one thing. Advisors know that they can step out at any time, create their own registered investment advisory firm, less than $10,000 and 10 weeks. It's not that complicated. The big firms offer a lot, don't get me wrong. There's no question about that. But understand that client-focused advisors are not chained to them. I've been helping advisors for 20 years set up their own RIA. It helps if you have somebody that's done it before walking with you. But to be honest with you, it's not that hard. Let me get back to the tax advantages and then we'll wrap this video up. Back to these distributions from some of these new fixed income preferred share offerings. Here's the key idea. Because the IRS treats Bitcoin as property and have for 10 years, it's not like the government hadn't looked at Bitcoin to determine if it's real or not. No, it was over 10 years ago. The IRS looked at Bitcoin. They did a deep dive. At first, their question was, should we tax this as a security or a commodity or what is it? And over 10 years ago, the IRS determined that Bitcoin is a commodity. It's going to be taxed that way, and it's real. So it's not a security, which means, and I want you to think about this, the federal wash sale rule does not apply. That means if Bitcoin drops significantly, which it does from time to time, it's an asset that, as I look at it, if somebody wants to get 4 to 5 times the return of the S&P 500 and they're willing to put up with 4 to 5 times the volatility, that's Bitcoin, okay? So if Bitcoin drops in price, let's say significantly, a company or even an individual like you and me, we can sell it at a loss and buy it back immediately and reset the cost basis without waiting 30 days. We don't have to wait 30 days to buy it back. That flexibility right there opens the door to highly advanced tax lot management strategies, to the point where a company like MicroStrategy, who's got billions of dollars in Bitcoin, I don't know if you're aware of this, but this company, Strategy, they own approximately 3% of all the Bitcoin that will ever be in existence on the planet. There will never be more than 21 million Bitcoin. And this company's Strategy started early and they're on the move. And they own about 3% of the total supply, which means that they've got cost basis all over the place. Matter of fact, if you're watching the Wall Street Journal, almost every Monday, Bitcoin is being purchased on a regular basis by this company, Strategy, which means they can do advanced tax loss carry forwards. and there have been tax law changes related to Bitcoin. Michael Saylor, the CEO of this company Strategy, was actually very involved in the GAAP accounting rules, the changing of the FASB accounting treatment of Bitcoin, which used to mean that if Bitcoin's price ever dropped below the cost basis, they had to carry it as a loss. And even when Bitcoin bounced back above the company's purchase price, they had to keep it on their books as a loss. It was a really negative tax consequence. And as a result, MicroStrategy has lots of net operating losses from this screwy accounting rule, which has now been changed. Michael Saylor got involved. He got this FASB accounting change. So now Bitcoin is marked to the market. That's why you're seeing hundreds of companies, public companies worldwide, taking this strategy that MicroStrategy made so successful, and they're using it globally. For MicroStrategy, who had to suffer with these screwed up accounting rules for so long, they now have all these paper losses carried on their books. And when they pay dividends, they can return some of that distribution to the shareholders in the form of preferred stock dividends as return of capital. So if the company manages its Bitcoin purchase and sales carefully, selling high basis coins that they acquire, realizing minimal gains, or even using temporary loss harvesting, this company can potentially extend that return of capital treatment for more than a decade. It could go on forever. We'll see what they're able to do. But that means investors could enjoy tax-deferred income. The point is, fixed income securities like preferred stock, you're not buying Bitcoin. You're buying preferred stock from a company with a great reputation that has this, okay, Bitcoin is the collateral on their balance sheet, but they've got all these net loss carry forwards that they can pass on to their shareholders. It's a simpler conversation to the client. You have a fixed income security. You own preferred stock of this company. It's high in the liquidation schedule if the company ever goes south. They have lots of assets. The preferred shares are, in my opinion, over-collateralized. They pay a 10% yield. You can look at the different preferred shares. They all have a little bit different yield, daily liquidity, and they need to understand the risk return profile, but that's up to you to go study. That's up to you to explain to the client based on their risk profile. So to put it plainly, this creates a brand new category of yield, Bitcoin-backed tax-advantaged income. The market may not yet understand how to price this. I'm convinced they don't, but if you want to dive deeper into how this works, including everything I've talked about here, the wash sale exemption, earnings and profit rules, the return of capital strategy, I've written a full memo for financial advisors explaining all this in detail. You can read it right now on our website. I'll put a link down in the description if you have any interest at all. I call this the Bitcoin Return on Capital Tax Memo. I encourage you to go look at it. I think this kind of new asset class, this new innovative type of asset class could change how we all think about yield, how we all think about tax efficiency, and how we think about Bitcoin in the economy. Because you're not owning Bitcoin, you're owning preferred stock. Bitcoin is simply a footnote in your ability to create an experience for clients. But I focus on Bitcoin because the level of understanding is statistically alarmingly low in the financial advisor community. In the years ahead, financial advisors who understand the planning opportunities around Bitcoin, those advisors are going to replace financial advisors who don't understand Bitcoin. You need to understand concepts like this that I'm describing here in this video. And if you hope to survive the coming AI tidal wave, I hope you understand that tidal wave is going to remove most financial advisors from our industry. So I encourage you, come join us. The Mark of Mastery for Financial Advisors. It's a free community. I encourage you to come join us. Do it as a group. It's full of advisors, very serious, full-time professional financial advisors, all who are in the same mission. We want to turn up the temperature on your business so that you can create an experience around an overarching plan for ideal clients that's truly extraordinary, an extraordinary client experience that AI cannot replace.